Welcome to the class, students. Let's begin with another lecture in the series. Today, we are in a situation that we have completed on Unit 2 almost, and now we are left to practice the full-fledged questions from cash flow analysis. For this lecture, I have brought certain numerical questions for you people. This is for the purpose of cash flow operations, specifically for non-cash items, because in the many questions in the previous videos, you people have seen that non-cash items were very less in number. So this question is in particularly given to you in order to highlight those, like what can be the examples and how the question would look like. Here you can see P&L account for the year ending 31st March is given to us as on 31st March 2010. Salaries and rent obviously are not non-cash. Then we have non-cash items, depreciation, loss on sale of land, goodwill written off, proposed dividend, provision for tax. And here on the credit side, we can see that there is profit on sale of land and income tax refund. Now let us see how to treat these to calculate the cash from operations. So to begin with, we will begin with net profit. So we will add the non-cash expenses that we have. Okay. Then we have, in this we have 5 items: depreciation, goodwill written off, proposed dividend, provision for tax, and loss of sale of plant. We can add all the items and obtain 27,000 here. And we do have 2 items under non-operating incomes, that is profit on sale of land and income tax refund. Then we can add here as 8,000 and can obtain cash from operations as 19,000. Here in this part, no entries, because balance sheet is not given, so no entries are there for any working capital, means for current assets and current liabilities, no entries have been given. So for that purpose, here cash from operations is coming out as 19,000. Let us have a look to a full-fledged question. Here we are having balance sheets of VXL Limited at 31st December of 2 years. You can see that in general the prior year is written first and then the later year is written. But in this question, pay heed that your 2008 is written here and 2009 in the first column. So please do write the decision whether a particular number is increasing or decreasing. We do have cash balances, then trade debtors, inventory, and 2 fixed assets, that is land and plant and machinery. Then liabilities and capital, let us have a look. We have trade creditors, then debentures, provision for depreciation on plant is there, equity share capital, retained earnings, and they are saying that cash dividends of rupees 25,000 have been paid during the year. Now slowly adjustments would start in cash flow statement. So you are required to prepare a cash flow statement on indirect basis. Let us have a look. We will begin with cash flow from operating activities. Net profit during the year can be calculated by adding the dividend paid, that is 25,000, and the increase in retained earnings, which is 35,000. So overall your net profit is coming out as 60,000. Then we do have depreciation, 20,000, depreciation written off 20,000. There are no other cash items to be added. Then we will see that if there is any decrease in current assets and increase in current liabilities. So we are able to find two, that is your decrease in inventory and increase in creditors. After that, we will move towards the next part. We do not have any non-cash incomes to subtract. In place of that, we do have to subtract increase in current assets and decrease in current liabilities. For that purpose, we do have only one item, that is increase in debtors, and finally we can obtain the net inflow of operating activities, that is 85,000. Then at the next step, we have cash flow from investing activities. Purchase from plant and machinery is there, so we have marked as, because it is an outflow, we have marked it in negative, minus 50,000. Sale of land 20,000, because it is getting decreased. Finally, in case of investing activities, we do have an outflow of 30,000. Then financing activities, we have issue of shares 40,000 written in plus. Then debentures are getting reduced, so this means that there is redemption of debentures by 60,000. Dividends are paid by 25,000. And finally, here also you have an outflow of 45,000. So finally, after calculating these three amounts together, we are able to find that there is a net increase in cash, and finally we can add the cash balance in the beginning and obtain the cash balance at the end. Then next question also shows such similar things, but there are certain adjustments to be made. On this page, they have given you balance sheet of X Limited as on 31st March 2008 and 2009. We can see we have two fixed assets, land and building, plant and machinery. Then we have current assets as stock, debtors, prepaid expenses, and finally cash at bank. Under liabilities, we do have share capital, P&L account, general reserve, current liabilities as sundry creditors, bills payable, and outstanding expenses. Let us see what adjustment is given to us. They have given you an additional information in the question that rupees 50,000 depreciation has been charged to plant and machinery during the year, and a piece of machinery was sold for 8,000 during the year, which was costing rupees 12,000 in the books of accounts, and depreciation of 7,000 has been provided on it. So if I talk about this particular machinery, let us have a look that we are able to generate in profit or loss on the sale of this machinery. Before beginning with the cash flow statement, we need to draw the ledger account of plant and machinery so that we can see the status, that how much is the cash, is the purchased or plant and machinery purchased or sold in the market. So for that purpose, let us discuss this point, then we'll move towards further drawing the plant and machinery account. See, here a plant and machinery was sold for rupees 8,000. Originally, the cost of that machinery in the books of accounts was 12,000. When you charge depreciation of 7,000 on it, so the cost standing in the books for that particular machine comes out as 12,000 minus 7,000 as 5,000. So machinery of 5,000 is being sold for rupees 8,000. So for that purpose, you are able to see a profit on sale of machinery as 3,000 mentioned here. Another entry by cash sale 8,000 here. Two entries are being done from here. And from this first additional depreciation you can see, so we have charged by depreciation 50,000. Let us see from where the other amounts we have brought. Here let us see what is the amount. We can see that plant and machinery is 5 lakh and 8 lakh. Okay, so that would be the amount that is being brought down. To balance brought down is 5 lakh, by balance carried down is 8 lakh. So whatever is left, here we are able to have a debit balance. So this is the amount of cash which is being uh, spent on buying the machinery. Now let us have a look how to draw cash flow statement in that case. We will begin from cash from operating activities only. For that, profit during the year is considered as 60,000. We do have certain non-cash expenses to add, that is depreciation on machinery 50,000, general reserve 20,000. Then we need to have a look to current liabilities and current assets. Under that, decrease in current assets and increase in current liabilities are added up. So decrease, for that purpose we do have decrease in stock and prepaid expenses and increase in creditors and bills payable. Finally, the amount comes out as 2,04,000. So after that, we do have non-cash incomes to be subtracted, which we have only one, that is gain on sale of machinery, that is 3,000. Then increase in assets and decrease in current liabilities are being sorted out. So for that purpose, we have only two items. One is increase in debtors, another is decrease in current liabilities. Finally, after subtracting these all, we are able to see that there is a cash inflow from operating activities, which is 1,89,000. The next is cash from investing activities. We are able to see that we have sold machinery, so we have added that for rupees 8,000. We have purchased machinery for 3,50,000, so minus we have written. Same ways, plant and building is also getting increased, so we have purchased land and building also for 40,000. So finally, there is a cash outflow from investing activities of 3,87,000. Now, if we look at financing activities, we have increase in shares, so issuing shares for rupees 2 lakh, and no other activities are given under this head. So 2 lakh rupees is the cash flow from financing activities. Finally, after sorting out the amounts that we are having from three activities as rupees 2,000, so there is a net increase in cash, that is rupees 2,000. We are supposed to add cash balance in the beginning, that is 16,000, and obtain the cash balance at the end, that is 18,000. I hope you people are able to catch the concept and are able to understand the concepts. If you people face any problem while solving these questions, you may contact me if you have any problem, if you are not able to understand. We are having one more question here. Here I have given you more number of adjustments, and we do have more uh, ledger accounts to draw before drawing cash flow statement. We can see under liabilities, we are given with equity share capital, share premium, general reserve, P&L account, debentures. Under current liabilities, we do have sundry creditors, provision for taxation, proposed dividend. Then under assets, we have fixed assets as land and building, plant and machinery, and furniture. Under current assets, we have stock and sundry debtors and bank balances given to us. They are saying that the depreciation has been written off during the year on land and building, plant and machinery, and furniture. So we are required to prepare a cash flow statement, but before that, we will be preparing the adjustment accounts. So for that, first of all, let us draw three fixed asset accounts where we are supposed to charge depreciation. So first, we need to go for land and building. Let us have a look how to get the amount. Let's see what is the amount for land and building. We can see here it is 2,30,000 and here it's 3,90,000. So these are the balances that have been brought down and carried down. You can see 2,30,000 is the amount that is being brought down. 3,90,000 is the amount that is being carried down. And depreciation on this is given as rupees 60,000, so it is charged on the credit side. And here we do have again a double balance, that is we have purchased the land and building, that is 2,20,000. If I move towards the next fixed asset, that is plant and machinery, there you can see that the balance brought down is 85,400 and the balance carried down is 1,40,000. We need to charge a depreciation of 50,000 to it. There also we are able to see that there is a purchase of the asset that by 1,04,600. Next fixed asset account is furniture account, where we have a balance brought down of 5,500 and a balance carried down of 6,500. We do have to charge a depreciation of 1,200, and finally in this also we are able to see a purchase of 2,200. We are preparing a provision for taxation account also because we have adjustments under this. We can have a look about the taxation amounts which are given to us. Let us see the taxation provision. We are having 22,500 and 40,500. So we will be providing that. You can have a look that the balance brought down is 22,500 and the balance carried down is 40,500. And we do have balance from P&L account, that is 40,500. We can take that and finally we can obtain that how much tax is being paid in that particular year. Then further we can go and move and draw towards the cash flow statement. So for that purpose, here we have, again we will begin from the cash flow from operating activities. We do have a profit of 50,800 after subtracting the amounts given to us. Then we will charge all the three depreciations that we have seen in the adjustments: land and building, plant and machinery, and furniture. And finally, we do have a general reserve of 20,000, taxation provision of 40,500, proposed dividend of 35,000, and there is an increase in creditors by 5,700. Finally, it is 2,63,200. Then we need to subtract the other current assets and liabilities. Have a look. We need to add increase in current assets and decrease in current liabilities. So in this case, we do have two items, that is increase in stock and increase in debtors. So we will subtract that and obtain it, the amount, and finally we can subtract the amount of income tax paid and obtain the inflow from operating activities, that is 2,16,900. Let us see the next steps further. We do have cash flow from investing activities, where we have purchased all these three assets. We have seen that from the ledger accounts, the working notes that we have prepared. So for that purpose, we have a cash outflow of investing activities of 3,26,800. Finally, the cash flow from financing activities, we have to add where we are receiving the money, that is issue of equity shares, that is 50,000, share premium, that is 30,000, issue of debentures, that is 70,000. Total is coming out as 1,50,000. And last amount that we have in this is the payment of dividend, that is 30,000, and finally we are able to obtain cash inflow from financing activities. So after calculating all the three activities, operating, investing, and financing, we are able to obtain the net increase in cash, that is 10,100. We can add the balance that we have given, opening balance of cash, that is 34,200, and obtain the closing balance, that is 44,300. Finally, we are done with this question. Further, if you have any more doubts related to the questions from cash flow statement, you may write to me and Here at this point, we are finishing Unit 2. From the next lecture onwards, we will be beginning Unit 3. Thank you, students. Study well, take care, bye bye. Enjoy, study well.